Hello, welcome to McBoss Capital channel. My name is Michael Chu. This is the US stock market recap video for the week ending July 24th, 2026. We have one more week left in July. We are in high earnings season gear right now, so earnings going to change a lot of the landscape of what stocks are going to lead if we do come into a new rally. At this moment, we are heading more into a pullback or correction, right? Because Nasdaq Composite weekly chart here shows that we hit new low this week, which is very negative because not only did we hit new low, we closed at near the lows for ending the week on Friday. So that is a pretty negative because it's setting up for possible even gap down on Monday morning. So that is something to be cautious about. We are clearly below the red line, which is the 10 weeks moving average. Now we are under it for almost 5 weeks in a row. We have been trading under it for almost 5 weeks. That is very negative because usually it will bounce back, after 1, 2, or even 3 weeks. As it gets into the fourth or fifth week, it's getting clearer that this market is not coming back up. And so now we are, again, not only did we not come back up, we are now heading into new lows, right? New recent lows since the April rally. So this is very negative. And as you see, we could head down as far as the black line because that's usually where the next challenge will be. Let's go into the daily chart here. We've been seeing lots of volatility, but you can see if you draw a trend line on the top here going down, we haven't been able to cross that above that trend line. This two little, try here, trying to come out, it fell, right? It tried twice, it fell, and then from there we just been heading lower. We did have a bounce earlier this week, right? We have a bounce Monday, Tuesday, Wednesday, but that bounce, you can see it clearly find resistance at on the 10-day, the green line here, and also the 21-day pink line, right? So we failed that, and now we did test the lows on Friday. We make a new low actually, right? We didn't close exactly lower. Well, it did 975, right? 975, 24.97. It's below the 24.980. So we did close at a new low. Here's the S&P weekly chart. We also fell below the red line for the first time, where it closed below it for the week, right? So that is also negative. On the daily chart, you can see it more clearly, right? So we broke this red line right here on Thursday. And then on Friday, we tried to rebound in the morning, but eventually it just closed down again, even though it was up for the day, like just slightly, compared to Thursday's close. But you can see we just reversed back down. Again, we're setting up for a Monday gap down possible if there was some bad news, right? Or we could, come back up again and try to test the 10-day once again. So a lot of things can happen, and with earnings season in high gear so far, there's lots of volatility, so anything can happen. But the trend seems to be down, right? S&P, if you draw a kind of a trend line from the top here, again, we see these 2 points here trying to come out. It looks like it was going to come out and then it fell. And it's almost like a bull trap because if you hold on to here, this level here, during that last week, and you didn't get off, the horse here, you could have fall. It's been falling since. And who knows how far this will go, right? The trend line is forming because the 10-day is coming down now. The 21-day looks like it's about to turn as well, coming down. So it's just not looking very good right now. Of course, we could have a bounce back next week on Monday or Tuesday or whatever and come back above again, right? But it all depends on what happened, with a lot of the macro news and the earnings, right? So lots of uncertainty at this moment. So here's Dow Jones also pulling back for the third week in a row towards the red line as well, the 10-week moving average. It doesn't look as bad as Nasdaq or S&P because it's still above the red line. On the daily chart, you can see it more clearly. The trend is clearly downward. At this so far, we haven't crossed the red line like the previous pullback here. But anything can happen right now. So we'll see. Russell also pulling back. It's just sitting near the red line. So again, also very similar. This is to Dow here. This one has been pulling back for four weeks now, and we're just sitting right near the red line here, the 50-day moving average. So So hopefully it doesn't break it because we haven't broken this red line since the beginning of the rally as well. Here's CapForce IB50 ETF covering the 50 top growth stocks. You can see we are down 5 weeks in a row here. Pretty nasty correction here, down 15% from the top. So we are at the black line right now. The last two times it did, first time bounce off it, second one undercut it. So we'll see where it goes. And then even recently we came down here once again. So we already tested this low as well. So that's incredible. 37.26, 37.31, 37.25. So just a little bit, right? Just undercut the previous low here, but doesn't look very good. On the daily chart, you can see it looked pretty nasty. It's just sliding below the 10-day moving average. Just no power whatsoever trying to come back this line. Here's the 10-year euro jumping really strong this week, Monday, Tuesday, Wednesday, Thursday, Friday, give back some, but even then on Friday, look at where it closed in the upper range on that pullback. So we are very extended, but right now we're sitting at 4.67%. We reached as high as 4.7, so who knows? We may continue to go higher. Here's the US dollar index. We've been pulling back, and this week we've been bouncing. Look at how it just stayed above the 10-day moving average. Even Friday, it couldn't stay down. It just came back up by the end of day. And then the oil price doing very similar. Look at Monday, Tuesday, Thursday, going up really strong here, almost parabolic by Thursday. And then we pull back on Friday. Again, Friday we're able to close in the upper range. So that is quite interesting. Gold price tried to come out here on Wednesday, but it fell back by Thursday. So again, still on a downtrend at this moment. Silver is also doing similar thing, just below near the 10-day moving average right now. Copper also tried to come out but fell back very quickly on Thursday. Look at that. It gapped out on Tuesday, gapped down on Thursday. Now we're back to where the short-term moving average is. Bitcoin also tried to come out, but it fell back to the 10-21 day line once again. So yeah. So for going into next week, we have the Federal Reserve meeting on July 28, 29. Market sees about 38% chance of a rate hike on Wednesday. So that is quite interesting, right? There's a high chance, 38%, which is higher than before. And then by September meeting, we're going to see an 80% rise. So is this Wednesday during the conference, is Fed Walsh going to talk about rate hike? Because that could spook the market because, many people still think probably we shouldn't raise rate until later this year. But it's possible that they might start to raise rate or at least goes toward that path. And so how the market react, who knows, right? Whenever they announce some sort of rate hike path, that's usually spook the market for a little bit, at least at the beginning. So something to be aware of. We do have lots of earnings coming out still. Notably, we have Seagate Technology, Silicon Motion, SK Hynix, which is a new IPO, Samsung Electronics from the Korean market, Fortinet from the cybersecurity space, and then we have the big cap Microsoft, Meta, Amazon, and also Apple as well. So lots of big Mac 7 stocks are reporting. And last week, of course, we have Google and Tesla. We'll talk about it in a second. Let's look at the Roundhill Magnificent 7 ETF. This one was forming a nice cup coming back up, but then all of a sudden this week we just came back down. We were above the 50-day. We reversed slightly last week, and then this week we followed through with that reversal. And not only we went below the red line, we are also clearly below the black line now, right? So this is the second time in recent weeks where it went back below the black line. So it doesn't look very good right now. One of the highest, but really bad range. You see that range is pretty wide. Definitely, it's not looking good. On the daily chart, you can see it more clearly. We were bouncing back above all the short-term moving average last week, but this week you can see we just gave back. So it started last Friday, and then it continued this week, Thursday and Friday here. Here's the semiconductor ETF. Last week we were trading way below the red line. This week we came back up early in the week, but then look at where it closed. Pretty much near the same level as last week. So that reversal coming back down, closing at the bottom range of the week for the week is not also good. Because now we are setting up for a possible break of that low here, right? On the daily chart, you can see this better. We bounced back for 3 days. Thursday we start to find strong resistance there. Friday we gave back, we came back down. So again, we're still a little bit above the previous low, but if we have a bad day, we can easily break that low. So we did have Intel reporting this week. It was actually up after hours when they reported. But by the next day, not only, it didn't have any gain, it just continued to go down. So that is very bad. You can see this on Friday's move here, down 7%. Again, we're coming back to the previous low. We will probably test that low here, which is going to be very interesting. Nvidia, looking at this, it doesn't look as bad as some other stocks because it's still holding up above the 1021 day. It's just sitting near it. And you can see it's trading very tightly as well. Like tight as compared to many other stocks. So that is interesting because we came back up, we pulled back here, and then we bounced back. We tried to come out on Wednesday, see making a new high as well, new recent high. But Thursday and Friday, just too much selling pressure in the marketplace. But yet, this stock didn't really want to come back down. So that is something to watch. Of course, we're over 30 days away from the earnings. Who knows what will happen then? But right now, it doesn't look as bad as many other stocks. Here's TSM reported more than a week ago, tried to come back, but again, you can see a clear resistance at the 1021 day during this week. It just couldn't come back above it. Friday, we went back down. Here's ARM, very similar chart. Again, you're starting to see a theme here. They just couldn't come back above the green line, which is the 10-day. AMD, which is one of the stocks that have been holding up pretty well. It bounced back this week, and by Friday, it did close slightly below the 1021 day, so just slightly. But it still overall look like it's a very choppy chart. But compared to many stocks, it didn't kind of pull back. It's more, you see, it's not that far away from the high here. It's well, now it's a little bit further, but still looking much better than other stocks. Here's Broadcom, also seeing clear resistance at the red line here. Right now it's trading slightly below the 1021 day. Here's the WenX Semiconductor ETF. Oh, sorry, not the semiconductor. The iShares software sector ETF. IGV is the symbol. This week, we were holding really tight the last 3 weeks, but there was just too much selling pressure in the market right now, and it really pulled this index, this ETF down. And again, this looks very dangerous as we are getting closer to breaking that low here. It suffered Tuesday to Thursday drop, which is very significant here. And many software stocks got hit. And Friday's bounce is very weak. I mean, 1%, it's just a very weak bounce. And it also closed near, it didn't even close in the upper range. Google reported, but their AI the AI related spending is just so high. I think they're spending 200 billion, approximately 190 to 200 in a year right now. That is humongous. And the market did not like that news. And look at this stock. It dropped over 7%. Now this looks really bad because even Friday couldn't bounce to the black line. Look at that. So this is very negative. The other thing that's very interesting is going forward earnings right here. So this is September, December, March, June next year. Look at the earnings growth. It's going to be negative right now based on forecast next year. So that is something to be cautious about as well, because it's consistently, you look at these numbers from the past. 20%, 22% is the lowest growth here. 62%, 80%, 290%. And now we're sitting at 5% and 19% in the next 2 quarters, and then negative. Is Microsoft reporting this coming week? We are sitting below the 1021 day right now. Doesn't look good, although it doesn't look as bad as some other stocks. Meta was doing really well recently until here, last Friday, and then Monday, Tuesday, it couldn't come back up, even though those are positive days for the market. And then Wednesday, it started to break down again. Thursday, look at this. It just dropped to the red line. Friday, much lower. Here's Amazon. Look at this. The impact on Google's earnings, from Google's earnings, was significant. Look at, Amazon wasn't even reporting, Meta wasn't reporting, but they're all dropping like a rock on Thursday. And right now, they're all below the red line. This is incredible. So the weakness is just so clear, like it's just so apparent that we really need to stay cautious. Like, why are all the stocks just tumbling? Alongside Google's earnings, and obviously their AI spending is just really, really high, and that, I don't know, that seems to have impact all these other stocks, mega caps as well. Of course, there's other things related, right? The 10-year yield is shooting up. Cost of borrowing money is getting higher. All this stuff is happening at the same time. We have Fed uncertainty coming up, in terms of what their rate hike, path looks like. So all these things are, you know, causing people to sell. And these are the biggest of all stocks. So the mega caps are getting sold off. I think it's time to stay cautious, because we just don't know what to expect right now. There's just too much uncertainty, not just with the US-Iran war, but there's so many things happening right now. Earnings, again, we have to see those numbers. Google being the first big mega cap, AI stock to report, other than Taiwan Semiconductor, is really showing, lots of potential issues going forward. Next, we have Apple. Surprisingly, Apple went up on Friday. Um, there may be some news that I'm not sure, but it did go up on Friday, so that is up and trading very tightly even on this recent pullback throughout the week. Um, and the story there is that they're not spending too much on AIs, and so they're probably going to be able to sustain whatever their balance sheet look like, and their cash level. So on the other hand, Tesla looks terrible after their report. Again, the cash flow will become negative, as that's what I believe. And so that really spoke, this stock as well. It dropped quite a bit, over 14% on Thursday. And Friday, it continued to drop. That's how, negative it is when in regards to, their earnings. Finally, we have Netflix. Netflix reported the week before. Surprisingly, this one has slowly bounced back towards the green line again after being oversold, I guess. So we'll see what happens, because the closest it comes is to the pink line, and but each time it comes to the pink line, it did drop back, right? So it can continue to come above the green line here, but again, we'll have to. This is a very long downtrend line. So whether this is, in terms of evaluation, is this low enough for buyers and institution to come in? We'll see. Yeah. So in the next video, we'll cover more growth stocks. Although not many stocks have reported, which we'll focus more on, the ones that have reported. But we'll see a better picture. We'll talk about, is there any stocks from which area that's doing well? And there is, surprisingly, and then we'll talk about that. Again, not many earnings yet, but at least there's some signs of life, right? It's not all red, all negative. There's some that are moving. Whether that will continue to expand as earnings season comes, I don't know. We'll see. Thank you all for watching. Hope you guys have a good weekend. Please like and subscribe.